How many times in your trading career have you heard the expression, you should trade like a robot, and you should not have emotions in your trading, and that you should strictly trade based off of a rule set and never let emotions get the best of you? Well, in the real world, we human beings do have emotions, but today we're talking about possibly one of the most important trading psychology tips that you can possibly learn about, which is avoiding the traps of revenge trading. So first of all, let's define what revenge trading actually is. Revenge trading is essentially when you take a trade out of frustration or your emotions are running hot and you essentially feel the need to recapture maybe lost money. Typically, revenge has to do with something has happened to you to make you want to take revenge. And trying to take revenge on the market itself is a really dangerous path that a lot of traders can get themselves into a lot of trouble with. So the first strategy to understanding how to better handle revenge trading is to know exactly how to spot that you are feeling the urge to revenge trade in the first place. If you've been trading for any amounts of time, you know that trading is difficult and it's frustrating and there's nothing easy about it. It's actually natural, I think, to be frustrated when something doesn't work out. It's sort of like if you head to a date and your date stands you up. That never is going to feel good. Well, that's the equivalent in trading to having an idea and it falls flat and you lose money. But what separates skilled or professional traders from traders who struggle with this is that they know how to stop themselves from making those critical, disciplined mistakes. And it is easier said than done, and it is something that requires practice. But as we've just gotten done describing, once you know how to spot that you have the urge to revenge trade, we can do something about it. But before we talk about that, here are some things that you may have made this mistake of, I have made this mistake of in my past, and I think is very common in the trading space. You take a string of losses and you feel very frustrated with the markets and feel that you can't keep losing because you've already lost so many times in a row. So what do you do next? You decide to double down or quadruple down and you put way too much size on the trade and make a very costly mistake when the market continues to move against you. If you are making these kinds of spur of the moment decisions where you are betting big or you feel frustrated and a rush of emotions when you're placing trades, you are probably on the cusp of making some really dangerous decisions that carry a significant amount of risk. And as traders, we are doing everything that we can to minimize the possible risk to our own trading portfolios or accounts. So learning to get this temptation and this spur of emotion under control is critical to any long-term successful trader's journey. So the next time you feel frustration after having a losing trade or a few losing trades or having an open trade that is in drawdown, what can you do to stop yourself from making critical mistakes? So the first thing is to actively reflect on past instances where you've made this mistake before and where it has likely cost you something. Remember that pain and say, I'm not going to repeat that sort of thing again. The next thing to do is recognize that a good trader has a strategy and a plan before placing trades, and ensuring that you are sticking to that strategy will make or break the longer term success in your trading performance. If you've done your homework, you've back tested and built a strategy, then that is what you have to rely on. But making a spur of the moment decision to put on way too much size likely goes against the strategy that you've taken so much time to build, design, and backtest. So here's a simple trick that I use if I'm feeling frustrated by a string of losing trades or I'm in a drawdown, but I know that I'm so far still sticking to my rules. The next step is to close your charts and walk away. It really is as simple as that. If you feel the emotional desire to get back that money that you've lost, or you feel frustration coming on, you have to know yourself well enough. And from personal experience, that's a great time for me to close down the charts and move on to doing something else. For me personally, a great way to combat this is to go outside, take a walk, go on a bike ride, do something physical, work out in the gym to get myself away from the charts and to give myself something to do to relieve that stress. I think a lot of times we hear this idea of you should just be a robot, but we're human beings and we do have feelings when we lose trades. It doesn't feel good no matter how you slice it. However, in order to make a logical decision, I think putting space between us and the charts is a really safe strategy to improve things. You are much more likely to make a costly mistake if you rush the decision-making process and you feel those spur of emotions when you are placing your next trade. It is much harder to think clearly when you are enraged or frustrated, or you've gone through an emotional roller coaster just before placing your next trade. Here are some signs also that you are definitely revenge trading. If you place a trade and you immediately feel regret or the desire to close those trades, that's a good sign that you probably are revenge trading. Another tip that I've found over the years of trading, as I've been doing this nearly 10 years, is that when it comes to placing trades, if it's something that you can't get your mind off of or you can't sleep at night, these are things that are going to severely impact our ability to function, not just in trading, but in our everyday lives. What that likely means, from my personal experience, is that the position size that I have on is too big. If I can't stop thinking about it or staring at my charts or focusing it on all the time, the chances are the trade is too big and it is emotionally draining, which makes it very difficult to be consistent in your overall approach. My personal opinion is to keep trade sizes small and to really do your homework on the risk management and strategy backtesting side of things. I hope this video was helpful to you, and remember to subscribe to the Oanda YouTube channel if you have not already. Drop a comment down below on how you handle revenge trading, and we'll see you in the next video.